The ability to move any asset near instantaneously anywhere in the world, I think, is blockchain's superpower, in my opinion. And that's just like perfect for collateral mobility. When we think about on-chain FX, I think we're in a great place. I think the ledger has the fundamentals. It has a great order book-based decentralized exchange. In addition to the AMM, we now have the permissioning that you talked about. So when we think about Ripple payments, the bread and butter is of course cross-border payments. And I think in order to fully bring that on-chain, I think we need three sort of layers to be improved. So things like monitoring and then compliance is really the big one there. And that is fundamentally, I think, the biggest unlock for Ripple payments in particular, the permission DEX amendment and the ability to do permission or KYC trading on the XRP Ledger. I think that is the unlock that is allowing Ripple to actually trade and participate and be comfortable with the risk.
Hey everyone, and welcome to the Krippenreiter TV show, hosted by me, Krippenreiter, and my regular co-host Vet. Today, I'm very happy to be joined by Jazzi Cooper, Head of Product at RippleX. Jazzi has been part of the Ripple and XRPL journey for many, many years now and leads product strategy for institutional DeFi and tokenization on the XRP Ledger. So everything around the XRPL DEX, NFTs, multi-purpose tokens for real-world assets, and very exciting new on-chain financial features such as the upcoming single asset vault and lending protocol. All in all, she's working on making the XRP Ledger more powerful for institutions and for institutional applications and Ripple's broader product suite. Definitely one of the unsung heroes within the XRP community. I'm super excited to have you here today, Jazzi. I hope you're doing fantastic.
Yeah, thank you. Thank you so much for having me, Kevin and Bet. Excited to chat with you guys. It's always great to reconnect with the community leaders and hear what's top of mind and share ideas. So appreciate you guys having me and excited to chat with you all.
Nice. Excited to have you. You are one of the people in the Ripple ecosystem and especially also in the XRPL and XRP ecosystem who was around for more than 5 years now, I would say. So you are definitely native on XRP. So what would be interesting to know maybe for you personally, what caught you off guard in this journey? Like in this 5 years that you were part of this, what caught you off guard?
Yeah, great question. I think this might be controversial, but I'd say that you know I used to think that the world would consciously adopt blockchain, and that we thought a lot about how would blockchain get the next wave of big adoption and be fully adopted globally, and I think we thought it would be much more explicit than it's turning out to be. When we talked about mass adoption of blockchain maybe 4 or 5 years ago, the common answer across Web3 leaders was we need better interfaces, we need better user experiences, and we heard so much of that. And what I'm thinking now is the adoption of blockchain will be invisible, and that's almost even better because I think the scale of adoption can be so much bigger. So rather than replacing front end applications and making users aware that they're holding crypto assets, bringing in blockchain on the back end to replace a lot of the financial rails of financial systems and activities that people are already doing. So I think that's one of the biggest changes. And I actually think it's a good thing because I think scale and adoption is much broader if you're not reinventing the wheel and instead integrating with people, finance of how it exists and where it lives today.
Where do you see us in this journey of this not explicit adoption, the background adoption of this technology? Where do you see us? Do you see us on accelerating? Is it something that is picking up momentum, or is it still gappy in some places?
Yeah. I think that there's still a very long way to go, but I think momentum is tremendous, and it's so exciting, and it's what keeps me here after 5 years. I mean, we're seeing hockey stick growth with stablecoin payments, for example, and in a lot of cases, the parties that are involved are not aware that stablecoins are powering the movement of assets across borders or the settlement of assets, and I think that's totally fine. So I think institutions are becoming more and more aware of that, and with institutional adoption and them actually starting to embrace the advantages of blockchain and really understand that the momentum is definitely picking up there.
Given the momentum, What would you say is XRP's most prominent role in this potential financial future where everything will run on blockchain, but in the backend, basically? What's the role of XRP there?
Yeah, great question. I think my answer there is actually not super novel or exciting. I think XRP as a bridge asset is still something I'm super excited about, and I think there's a ton of potential there that has not yet been realized today. And so I think as more and more tokens, more and more stable coins, currencies come onto the blockchain, the need for XRP as a bridge asset increases exponentially. And so I've heard this talked about a lot at the philosophical level, and frankly, I was tired of it. I was like, let's get to the facts. And so this is actually fresh off the press. My team ran a model on this just a couple of weeks ago, and we looked at if you want liquidity across 50 different assets, and you seed that liquidity directly across every single pair, that's 1,225 pairs. Alternatively, if you just seed those against XRP, that's 50. So that's 25 times fewer pairs that you actually need to seed. And if you model out the capital required based on what that actual pair is, the most feasible pairs to bring on chain, it's 15 times more capital efficient to use XRP as a bridge asset rather than just seeding, seeding liquidity directly from stablecoin pair to stablecoin pair. So it's quantifiable, the advantage there.
This was also something that the IMF, they had like a post where they talked about tokenization and stable coins. They said if each central bank or government would have like their own issued currency, how many pairs you would need to create, it would not scale very well. There is a need for really a bridge asset, as you were saying. And it is essentially, if you are liquid to XRP, you're liquid to any other asset because you can just hop to the next one. It's like this hub and spoke model where you can see it and then
Exactly. Yeah. So that's the first one. I think XRP is a bridge asset. I'd say the next is XRP in credit markets, and I think that shows up in two places. One, there's a lot of people, a lot of institutions that are long XRP for good reason, and I think that's still largely a passive asset. And the ability to put that to work in, say, a lending protocol. We're working on bringing a lending protocol to the XRPL now. The ability to get yield on that asset in the interim is a huge advantage. So XRP as a loan asset is one, and then XRP as collateral, I think we're often seeing as the other side of that. When people are lending XRP, the other side of the market is, of course, people borrowing XRP. And one of the biggest use cases for that is the ability to use it as collateral in financial markets. And that's something that we're seeing, with institutions like Evernorth, with Ripple Prime, the ability to use XRP for collateral in their own business and financial activities is a huge advantage as well. So that's the second, XRP in credit markets. And I'll give you one more. Clearly, I'm excited about this topic. One more that I think is less defined that I'm still thinking about is how we can use XRP for things like fees, things like incentives. Obviously, XRP is used in base ledger fees. I don't think that's intended to scale significantly. It's primarily an anti-spam mechanism. It's really, really small by design, and I think that's what we all want. But as more and more financial protocols emerge on the XRP ledger, I think XRP can play a broader role in the economics of those protocols. And that's something that I'm thinking more and more about and don't have a formal thesis on today, but I definitely think it's a big opportunity for the future.
You mentioned to go like one back because that part, that fresh part, that deserves probably its own session. Sure. Yeah, the third one. The second, on-chain credit, which we are very passionate about. All the sessions at Apex, I remember, in Amsterdam and others with Vito, really like in depth. And this is where it started. I want to hear from you in looking at the XRP Ledger and the strength that you mentioned and on-chain credit on the XRP Ledger, and knowing also the financial institution background and their needs. What kind of need is being solved here? What kind of solution does it provide to bring something that is established in TradFi, which is lending, borrowing, credit, on chain? Yeah,
there's a lot of advantages. So I can talk through a couple of them. We can expand wherever it stands out to you. So I think the first natural advantage of the lending protocol, especially as it's designed on XRPL with XLS66, is the vault structure. So the vault structure has fundamental advantages both for the supply side and the demand side. On the capital supply side or the lenders, as individual asset holders, you and I can't necessarily participate in institutional grade finance, right? We just can't meet the check size. And so the ability to aggregate capital across many different individuals to create one large check increases our ability to participate in a lot of different financial activities that we previously wouldn't have had access to. So access for lenders is a big one. On the capital demand side, on the borrower side, you now have an additional borrower base, right? So you previously didn't have access. You can't onboard individuals as LPs typically. I think it's just too much of an operational burden to be able to onboard many, many people. So the ability to aggregate all of that, have a single check that's meaningful to you for your business, and be able to invest that's an additional capital source, both because it's aggregation and also because it's an entirely new asset class, right? Like crypto assets is a true meaningful source of wealth in the world today. And if you're not able to put that wealth to work, I think that's just an inefficiency in the capital market system that we have today. So activating capital markets, access to more and more people through aggregation. So I think that's a lot of the advantages of the single asset vault structure for both sides of the market. When we think about just the lending protocol on its own, on-chain loan servicing has advantages as well. The transparency, the chain of records, that's a noteworthy advantage when it comes to compliance and reporting just for lenders. I remember, Figure Markets reporting something like they were able to lower their cost per loan of loan servicing, something like $600 per loan, just by bringing that on chain and having that verifiable record keeping that they could then go to auditors and confirm, that the loan was processed correctly, that repayments were made. So there's efficiency advantages of on-chain loan servicing as well. And this is just lending version 1. There's so much more to come. Another advantage of the vault structure is, lending version 1 is one way to withdraw capital from that vault, but there's lots of other ways that we can do that. And I'm super excited for all of the innovation to come, not only from Ripple and my team, but from the whole community around XRPL on, what other innovations in credit can we unlock with these primitives.
Yeah, I expect actually the vault to be the center of basically all the DeFi primitives that exist. For example, AMM, why not take the liquidity that is provided into the AMM to also withdraw for, let's say, some kind of credit? Why does it have to be liquidity just for the AMM? So I think you can probably also mix all these sources together and make them more composable. But on this, maybe to step up to the next level, when I think about these DeFi primitives, especially when they are institutional based, I think of Ripple Prime and I think of Ripple Payments. And we all know with Ripple Payments, it's on-chain with the payment side, but it's not on-chain on the DEX side. And for Ripple Prime, we know everything is off-chain right now, but David Schwartz said at least 1%, for example, could be settled on-chain for post-trade settlement. And I think many people want to know what needs to happen next to go to this step. Like what needs to happen to bring Ripple fully on-chain as well with their product suite.
Yeah, that's a big one. So maybe I'll bite off them in separate pieces, the payments piece, and then we can talk about the post-trade piece after. So, I mean, fundamentally, I am not a person that believes that we should bring anything and everything onto the blockchain. I think that blockchain is really good at certain things, and maybe that's not everything. And I think we'll make more progress by being selective and bringing financial activities that benefit most from the blockchain. So when we think about Ripple Payments, the bread and butter is of course cross-border payments, and I think in order to fully bring that on chain, I think we need 3 sort of layers to be improved. So the first is operational reliability. So smaller pieces, but still fundamental, like access through custody, for example, and the right wallet infrastructure, the ability to interact with the blockchain. On top of that is things like monitoring, and then compliance is really the big one there. And that is fundamentally, I think, the biggest unlock for Ripple Payments in particular, the permission DEX amendment and the ability to do permission or KYC trading on the XRP Ledger. I think that is the unlock that is allowing Ripple to actually trade and participate and be comfortable with the risk of trading on chain. So that's that first layer, is operational reliability. It's boring, but it's really the critical stuff there. I think the second layer is around accessibility. So assets, venues, centralized exchange access points, and then also orchestration. So routing, liquidity. How do we know what trade settles where, and how do trades actually route to the XRP Ledger and settle there? And on the asset side, I mean, RLUSD has been a big unlock there. I think we're now comfortable with an institutional grade compliant stablecoin on the XRP Ledger that we can use to transact with as the cash portion. And then the last layer on top, which is also fundamental and super important, is deep, reliable liquidity in corridors that matter. And that's not just building TVL for the sake of it, but that's strategically thinking about where FX markets efficient in traditional finance and where are they not, and where can blockchain come in and really drive meaningful improvements on top of traditional finance today. So I think it's those, Yeah,
can you? This was great. These things that you mentioned, these layers. If we apply this to one of the recent posts that we have seen, or partners to onboard, was Bitso with Mexican peso, and to have this basically used with RLUSD on the permission DEX, that's basically like the example. Can you apply like these things to this specific, like the onboarding part, where it's like integrating the assets, so we can have sort of a view of the funnel with onboarding, I guess?
Yeah, so definitely excited about partnership with RPD and Bitso via them as one of the first pilot customers in production of the permission DEX. And so, all of those pieces come into play in terms of, how at the first layer, how Bitso is interacting with the blockchain. Does their custody provider, offer first-class support, not only for XRPL, but for the DEX itself. So that's been an important piece. Compliance is an important piece, figuring out all the pieces of the puzzle of who creates the domain, who issues credentials, how do we make all of that system and plumbing work together in a efficient and scalable way. So we've been working through that closely with the Ripple Payments team as well as the Bitso team. And I think we're in a good place there. We've done penny tests. We're starting to get the full end-to-end flow working in a way that all parties are happy with. I think, from an assets perspective, I think having those critical tokens, having peso, having, real in some cases, we're seeing the importance of, the Southern Hemisphere, basically tokens being on chain. Global South to Global South is generally an important corridor that we're seeing as an FX opportunity where blockchain can really make a meaningful difference. So having, reliable, compliant stablecoins in those currencies available on the XRP Ledger has been critical. And then lastly, which we're still working on, frankly, is the liquidity piece and figuring out how do we get the spreads where we need them to be? How can we work with market makers and build out efficient markets? And ultimately, I want us to solve this in a way that's scalable. So not just for Bitso, but how do we think about a domain that other parties can interact with as well? Basically, a system that can serve multiple different players and start to think about arbitrage between the permission DEX and the permissionless DEX, so that the XRPL exchange system as a whole can benefit. So there's a lot of pieces in there, and we're working through it. I'm appreciative to have pilot partners like Bitso, and hopefully there's more to come.
Certainly something that the community looks forward to. But just sort of what I got from this, and correct me if I'm wrong, from the amendment side, from the ledger capability side, because we have native compliance with credentials, permission domains, permission DEX. Permission domain can be applied to the DEX and to something like the single asset vault, right? But from a technical capability point of view, we are on a good place. As is, the part is now more off chain. Is that correct?
I believe so. I think from an amendments perspective, when we think about on-chain FX, I think we're in a great place. I think the ledger has the fundamentals. It has a great order book-based decentralized exchange. In addition to the AMM, we now have the permissioning that you talked about, which is great. I mean, there's always improvements, right? Like, permission delegation is a feature that's, hopefully going to be reintroduced for voting soon, but that's going to allow for better compliance of the token issuer. So we have to think about all the pieces of the system. We have the token issuer, we have the exchange itself, we have integrations. We're doing a lot of work around the SDK layer and how can we simplify the lift for any custody technology provider to integrate the XRP Ledger and minimizing that barrier to entry. So things like those SDKs, things like permission delegation to offer better compliance for token issuers. We have a lot of improvements like that, but you're 100% right. The fundamentals are all there.
Awesome. I'm looking forward to permission delegation. Yeah, it's coming in the next release, I believe.
Yeah, I believe also more stable coins in general, right? We talked about liquidity. Okay, what does it even mean on XRPL? It means more assets, right? We need more assets, and then we need them linked to RippleUSD or the XRP. Just to bring liquidity on board. But tokenization is the first step, and then stable coins as tokenization, and then linking it to XRP for, let's say, the AMM or the DEX, and then also to use them for lending, right? And then maybe to go back to lending again to Ripple Prime. How do we do post-trade settlement on XRPL? What needs to happen there?
Yeah. So let's maybe unpack that a little bit. So I'm not sure how familiar your audience is with post trade, but if we maybe break it down a little bit and define that. So we have trade execution, and then we have post trade. And so trade execution is where we're agreeing, we're going to trade a particular asset or set of assets at a certain price, and we actually execute that trade. And then post trade is everything that happens after that. All of the the paperwork, the settlement, the custody arrangement, all of the ugly stuff. Sometimes collateral is involved in collateral mobility. So there's a lot of complexity in the post-trade, aspect of a trade. And I think that problem is only increased over time in that, front office is easy, right? Like we hop on Robinhood, we hop on E-Trade, we execute our trade, we have nice UIs, and that can scale really, really quickly. But the post-trade aspect cannot, right? Like we have multiple parties that need to engage across multiple geographies. We need to move assets. I'm pretty sure fax machines are still used in post-trade. So it's and ultimately it's that least common denominator that's going to hold up the whole system. And so I think there's a huge amount of opportunity in post-trade. I think the next question is like, okay, where in that umbrella can we make progress? Where can blockchain differentiate? What's I obviously come from the product side. And so I'm thinking, what's the minimum viable product here? Where can we unlock the most amount of upside or advantage with the smallest possible workflow or change there? So really breaking it down from post-trade to a specific type of transaction. And one area that we're really focused on within RippleX and RippleX product is collateral mobility and that aspect of it. And so, the ability to move collateral anywhere in the world near instantaneously, so 3 to 4 second settlement time, soon to be atomically, and we can talk more about batch transactions, is really, really powerful. I think a lot of these markets are still operating sunrise to sunset, and they're not even on weekends. And so when you couple that just business hour operations with the complexities of multiple different geographies that have to communicate with each other and exchange collateral, like the system almost doesn't function. It definitely doesn't scale. And so we're thinking a lot about the ability to move any asset near instantaneously anywhere in the world. I think is blockchain's superpower in my opinion. And that's just like perfect for collateral mobility. And so even more specific to collateral mobility, like where do we start? I always ask the question, like, how can we get more specific, more focused? And repo is an area that we're really focused. Repo is somewhat straightforward in terms of you have preset terms, you have a preset counterparty. And what we want to do is basically exchange two different assets, a collateral asset, a cash asset. And you can do that on the blockchain. And that's what batch transactions or atomic settlement will unlock. We're really looking forward to that feature being added to the XRP Ledger in conjunction with the first version of privacy to help meet the needs of financial institutions and protecting their interests in that way. So we have some pilots in the works with on-chain repo transactions, and I think that's just really step one, right? I think from there we can keep building on top of that. And start to think more about the risk aspect. So collateral monitoring, collateral liquidation, and then also kind of the system-wide scale. So multi-party netting is something that's on our radar. After these initial just transactions occur. So there's so much. I'm just trying to find the smallest possible piece and then kind of expand from there.
An NFT question, I actually, because of this, do you see NFT, because that's typically also discussed out in the community, do you see NFTs also for yourself or with institutions as something that can do more than just, let's say, JPEGs or images? Or is that asset class in itself not interesting for institutions? Or is it actually interesting for institutions?
Yeah, great question. So if we go with that hypothesis, I fundamentally believe that the killer feature of blockchain is the ability to move value anywhere in the world near instantaneously. And I think that is the really, really powerful piece. Now we get to the question of, okay, what's the value, right? And that's where tokenization comes into place. It's not just crypto assets, because crypto native assets have certain attributes that aren't always suitable for various types of financial activities. Maybe there's too much volatility, or maybe they need to be backed by something off-chain in order to meet certain financial use cases. And so I actually love the sort of token primitives that we have on the XRP Ledger, just in terms of expression of value. So theoretically, we should be able to represent any type of value in the world, whether that's digitally native or not, on the blockchain, in order to fulfill that thesis of like, let's move value anywhere in the world instantaneously. So right now we have XRP, that's a crypto native asset. Then we have IOUs, right? That's just your typical fungible token that's based on trust lines. And I won't go into that now, but that has certain advantages and certain disadvantages. We now have a secondary type of fungible token, which is multi-purpose tokens. And we can now add on-chain metadata, which has advantages for tokenizing certain real-world assets, certain financial assets. And then there's NFTs, right? If you think about the things that exist in the world, I would argue that the vast majority of them are non-fungible. So if we look at my car sitting outside, or a tree, or someone's old trading card, all of those things are non-fungible. Real estate, non-fungible. And so the ability to represent such a large class of objects in the world on the blockchain in a proper way, I think is super, super important. And that's what a non-fungible token can do. So I really appreciate the variety of methods that we have today to represent value on the XRP Ledger. And whether you use that for art and collectibles, or real estate, or a used car, is up to the user. But from just a primitive perspective, I do appreciate the way the XRPL expresses that today.
On this, by the way, now that we talk sort of more about these native functionalities about the XRP Ledger, and you being such a long member in the community, and also at Ripple working products, like applying this technology to actual applications, have you seen a lot of times where you were in the process of applying things to an application, a solution, where a lot of the design choices of the XRP Ledger you really appreciated? Like, it's actually really cool that you had this, that you were like, oh, I learned to appreciate it now more than before, because it's been there, and now seeing maybe other protocols do similar things, right? While this has been like on the XRP Ledger for a very long time, I think like the order book, like one of the things, the club. Let me know like your own thesis on the design choices of the XRP Ledger.
Yeah. Good question. I think the just fact that we have primitives is something that I personally love. So features built at the core ledger layer as opposed to everything being a smart contract. There's obviously disadvantages to that, but just leaning into the advantages for a minute, I think that it has a level of security, durability, and trust that smart contract based features just don't have. Anyone could build a smart contract and push that to production without having, a group of validators voting that feature in, checking the security, checking the audits, checking that it's not intended to do harm to the users of that feature. And so that's something about protocol native features that I really appreciate. More specifically in that, when we think about compliance-based features, we have compliance embedded right into the protocols. It's not an afterthought. And so things like trust lines, deposit authorization, now the permission domains, we have more and more features that just have compliance built in from the beginning. And as we talked earlier about financial institutions adopting blockchain, that's what's going to give them the comfort to ultimately use these primitives in their business and ultimately to expose their customers to these features. I think that the nature of smart contracts is just too high risk for that at scale. And so I think that's a huge advantage of the XRP Ledger. And we're seeing newer chains start to replicate that. Like if you look at Tempo specifically, they haven't done everything smart contract based. They've selectively chosen a number of features that they want at the protocol layer. And I like to think that that's, XRPL inspired. And, I'm happy that they've sort of emulated that philosophy and that approach to building. Yeah. So, I think they've built something along the lines of batch transactions that exist at the protocol layer, maybe some privacy and compliance features as well. So those fundamental things, existing protocol, I think is the right way to go. I can go on about, things we've already discussed, order books, bridge currency of XRP, those features as well, I think are incredible and huge assets to XRPL.
Talking about batch, because batch is upcoming, it's a new feature. It will allow composability on the XRP, not smart contract based composability, but composability between already existing features. So very powerful. And one of the aspects of batch is delivery versus payment, what will be enabled. So trustless swaps between assets. But then in the community, there's the misconception, always coming from other ecosystems as well, that the moment you can do delivery versus payments, there is no need for XRP as a bridge currency anymore. Will delivery versus payments undermine XRP's role as the bridge currency? I don't think so, but is this maybe the wrong way to think? Okay.
Yeah, no, I think they're two different parts of the life cycle of a trade. And I think that if you so if we just separate market discovery versus matching versus execution and settlement, if we think about the life cycle, the open market allows you to openly discover the best possible counterparty to minimize spreads, and that's what you want for, say, like an FX market, for example. On the other hand, if you already know your counterparty, so take something like OTC trading or something like repurchase agreements, repo transactions, you already know your counterparty, the terms that you want. You've found the person, the discovery, and agreed on a deal, and all you want to do is execute that. That user in that use case was never going to use the decentralized exchange. It's just a different use case. So I think that DVP is great for that. It's great for atomic settlement of a deal or trade that you've already agreed upon. And I think for something where you want an open, fluid, efficient market like FX or certain other types of trading, you still want an open DEX. And that's where we talked about quantifiably that XRP as a bridge currency, specifically in FX, could be much, much more efficient. So I think they're just serving different use cases, and both will definitely persist.
Yeah, and I'd also say it allows for more complex deals that are peer-to-peer, right? That have nothing to do with the open market, that have nothing to do with the decentralized exchanges. I have a very special set of assets that I want to offer you, and you have a very special set of assets that you want to offer me, let's say an NFT, an MPT, and an IOU, right? We can exchange those together. That's would overcomplicate the decentralized exchange if you would try to do something like this. While like I see it with these trustless swaps, that's what it does. Because typically you could just say, I send it to you and you promise to send it me back, right? But we know like in blockchain, like you want to minimize the trust and say, hey, we make batch, and only if both arrive at, in my place and it applies to your place, the trade is executed. I love batch because of this transaction dependency.
Also really multi-party, right? You can do asynchronous trustless swaps because you don't have to do it right in the second. You can do, one party can lock something in like MPT, and then because you can co-sign both parties later on, you can actually do something like OTC where one party is ready, but the other party still needs some time to gather the funds to actually do the swap. So Jazzi, is there something for batch, especially that you are looking forward to, that is also something the institutions are looking forward to? Maybe is it DVP or something else?
You teased it before.
It's DVP.
It's DVP.
Yeah, it's definitely DVP and specifically DVP as part of a repo transaction or repurchase agreement. I would say is the phase one for us, and we're seeing basically a lot of interest.
Yeah, so looking back at sort of the batch transactions, and as part, you mentioned permission delegation, which are also upcoming. It's fair to say that batch and permission delegation, as addition to the XRP Ledger, are really providing a real unlock for institutional adoption to the XRP Ledger, to the existing like suite of transaction types that we have.
Yeah, definitely. There's so many different parties involved, right? So we talked about moving around value on chain. In order for the value to exist, you need token issuers. In order for you to have token issuers that feel comfortable meeting their own compliance and risk requirements, you need features like permission delegation, for example, which gives them increased control over who has permission to do what with regard to issuing and managing their token. And then we think about marketplaces and transaction coordinators. Having something like batch allows them to lower the risk, the counterparty risk for their customers by not having to wait. Who gives the money first, who gives the asset first. We completely remove that counterparty risk bit from the equation, which benefits the transaction orchestrator, and then of course their customers. And then we start to think about their customers and their businesses. They're doing these financial activities on chain, and they're thinking, okay, I have a proprietary strategy. I don't want the whole world to know about this. And that's where privacy comes in. And we're starting to think about the first version of confidential transactions.
I just wanted to ask, where does privacy, because we know there's confidential transfers for MPTs. It's one of the features where you use MPTs to introduce privacy essentially to the XRP Ledger, which is novel because we don't have any privacy primitives on the XRP Ledger as of yet. But with this, we would have now a first introduction of privacy to the XRP Ledger. Where do you see specifically this part play into like the process that you described with maybe post-settlement, settlement in general, or maybe even payments from the Ripple payment side?
Yeah, I think this is a big one for Ripple Prime as well as other players in that aspect, whether they're other prime brokers that are looking to engage or even certain market makers. The reality is like institutional finance is competitive. And if you have a particular strategy or approach or insight in the market, you don't want the whole world to know about that. And that's an advantage of the closed books and lack of transparency that exists in traditional finance. And so if we're saying we can lower your costs, increase efficiencies, increase capital efficiencies, give you access to more assets, but everyone's going to know about it, that might be a deal killer in certain cases. And we don't want to do that. We want to meet customers where they are, and certain parts of their businesses are private. And that's where confidential transactions really comes in. And so, again, everything we're building, we're not looking to throw it over the fence and forget about it. I think we're going to keep building on these primitives over time. And so we're seeing, confidential transactions, confidential MPTs coming out in the next version of XRPLD, and we'll continue to think about it in terms of how we can build on top of privacy from there, possibly, looking into account IDs and balances and things like that. Of course, it's a process managing that with regulators and making sure that the auditors and regulators have access to the information that they need while still protecting the private information of the financial institutions and other parties transacting on the chain. So it's definitely a challenge, but it's something we're looking into and tackling head on.
Would you say that, let's say we get the confidentiality and we get lending, for example, and then you already have the DEX. Would you say there is this one narrative that the XRPL could conquer, maybe even XRP, that we don't have yet? Because I would say XRP and XRP Ledger was always meant for payments. So payments as the big narrative that the community is following behind, aligning to. But maybe there is something new, a new narrative that you would say is maybe even bigger or better suited to XRP that you think is maybe more fit for the purpose.
Yeah, good question. So, I mean, what is a payment, right? It's moving value from party A to party B. And you guys said it as well earlier. What is settlement? It's moving value from party A to party B. So it's a different word for the same thing, which is like blockchains are really great at moving value quickly, cheaply around the world. And I think that's really where the focus is. Of course, there's other advantages that are built on top of that. Once you have value, once people are holding it, you can start to do things like credit or repos or things that are a little bit more complex. But I agree with you guys that fundamentally settlement is really the killer use case here.
Like a good friend would say, a lean, mean settlement machine. Shout out to Saul.
Shout out to Saul.
But yeah.
Couldn't say it better.
Yeah, that's not my words.
He will love it.
He will love it. So one thing I will take that is because I saw that there was the blog post must be almost 6 months ago where it was teased about this institutional DeFi portal.
Little Easter egg.
Yeah, there's a sort of little Easter egg regarding tokenization, payments, lending, so a full encompassing platform essentially. Do you mind sharing a little bit what was meant with the institutional DeFi portal and maybe also the thought behind it?
Yeah, of course. So we have a whole team within RippleX that's entirely focused on developer experience. And what they're thinking about is underneath these use cases of, we have the three pillars of payments and FX, credit, and then collateral mobility. That's really where we're focused. And horizontally, underneath that is developer experience. So how do we ensure that building on the XRPL is not only best in blockchain, but best in finance across the board? And, one thing that team noticed when digging into institutional adoption of blockchain is there's a lot of confusion, a lot of new terminology, maybe too much so. And also there's a lot of fragmentation of resources. So, how you tokenize something and then the wallets that you use and then the centralized exchanges. And oftentimes you have to go to a dozen different places in order to get the job done. And so the insight there was, let's take a particular use case like on-chain payments, for example, stablecoin payments for a merchant, and just break that down in a single place and hold their hand as they go through the flow from idea all the way through to launch and scale. And so there's actually an MVP of that use case that's out in the world and public that people can interact with. And we're looking for more feedback on, is this helpful? Is this needle moving? And if it is, we're going to look to build additional use cases on top of that.
Nice. I think people haven't found it yet because I don't think people, if this would be something big and public already for most people, they would have spoke about it, I think. So maybe we should just
if there's a link or something.
Yeah, we should definitely highlight this a little more.
Maybe it's only for institutions. I don't know.
Maybe it's gated.
Yeah, it's public. Anyone can try it out.
Okay.
Okay. Cool. Awesome.
Need to check it out. Well, one thing also for me here on that part, when you talk with institutions or talk with partners who are very savvy or interested in this technology or solution, do you have the experience or how? Yeah, and you can tell also how this changed, maybe even. Are they blockchain savvy? So when you talk to these people, are they float right with you, or is there a lot of education that you guys need to do sometimes on your end to explain how this works or answer a lot of questions? Or do you see that also the people that you're working with are really maturing in their understanding of blockchain and cryptocurrencies?
From a use case perspective, I think the knowledge and understanding is really strong today. I think people understand these use cases. Especially stablecoin payments is definitely taking off. We're seeing such a convergence between blockchain and traditional finance. So when we're talking about DVP, like we don't, we can meet in the middle. We both understand that concept. They might not understand exactly how the blockchain is doing it, but they're like, oh, great, you have DVP, you call it batch, it all works out. So I think we're really mirroring and meeting them where they are in terms of how finance works. And I think it's good to move beyond some of the blockchain terminology. I think we were a little bit too stuck in that for a long time. Our own verbiage, our own, technical explanation of how these things work versus just mapping it to financial concepts and meeting them where they are. So that's one thing. I think, depending on how long they've been in blockchain and whether or not they started on a different chain, I think education of XRPL sometimes takes some time. It's not a smart contract based chain. It has a different tool set some of the time. And that can require education at times. It can require some tool migrations at times. We're doing a lot of work to make that migration as simple as possible. And I think once you spend some time with partners, they definitely see the value proposition in the way XRPL is built and the use cases that we're focused on.
Would you say, Jazzi, to wrap this interview up, because I think we have basically covered everything already, what I would like to know, as you said, about the institutions, is there some kind of catalyst that they are waiting for, or maybe Ripple is waiting for, that would, let's say in the next 2 to 3 years, that would make them, maybe convince them actually to go on chain? Because you said you want blockchain and XRPL to be in the backend and maybe even hidden, but what is the catalyst maybe to make this a reality?
Yeah, I think the big piece is meeting them where they are, like I mentioned before. And so not saying, check out our DEX. It's really, really great. Everyone loves using the DEX. And then you can try this centralized exchange, and that's really great too. But rather saying, hey, how long does it take you to do post-trade settlement? And how much does it cost? And what happens when the geographies don't line up? Would you like to do this instantly? And would you like to, say issue a money market fund for 30 basis points cheaper? We can do all of that for you. So almost just modeling the, classic enterprise sales of what are your problems, and this is how we solve them in a way that they understand, rather than expecting them to be excited by our, fancy technology and acronyms for the sake of it.
So essentially compete with the product that they're using, right? Just offer something better with it. So
yeah, exactly. Okay. I think that's one piece in terms of the sale. I think making it happen still does require more infrastructure. Still does require meeting them where they are. Maybe there's some hybrid between the way we think about custody technology today and the way they think about custody technology or asset custody today. And there's probably still more meeting of the minds that needs to happen with infrastructure and with that middle to back office aspect of things. But I think we talked about before, how can we break down post-trade into the smallest possible piece? I think that's really where we start and work with pilot customers that believe in the use case, that believe in the technology, and build it out alongside them. I think that's what we've seen, to really be working.
Thank you, Jazzi. Awesome interview. I think we learned a lot today, especially about the products. I think this was something many people wanted to learn more about, especially Ripple Prime and Ripple Payments. And also awesome to now understand what post-trade settlement actually means, because many people talk about post-trade settlement, but they probably don't know what this even means. So interesting to learn that this is actually pretty complicated. It's not just having the blockchain and it can do settlements, so this should be it. It's actually a lot more. So thanks, Jazzi, that you were able to like break it down very easily for us guys. And I hope we can do this again in the future. And I hope we can talk about a lot more topics as soon as Batch is out, because I think delivery versus payments is also something that will fundamentally change how the XRPL is perceived by the institutions. So thank you, Jazzi. Until next time, guys.
Thank you so much for having me. This was a lot of fun.
Nice. Awesome. Thank you. Bye-bye.